Ladies and gentlemen, following Tesla's 2.2% green day today, quite a move into the second half of the trading day for Tesla. Tesla was in the red for a good portion of the day today, not doing too much, not really participating in the broader market rally. Well, that changed towards the end of the day. Now, here in after hours, Tesla stock is currently down about 0.8%. And look at that. Google is down over 7%. AMD, just a terrible stock, down 9.5% in after hours. I call AMD a terrible stock. I think the business is pretty good. I have AMD, in this computer, right? But the stock was down 30% from a year ago heading into this quarter, and it beat basically across the board, and it still fell 9%. Good business, crappy stock. And there was actually some really good news embedded in Google's earnings for AI. So we will discuss all of this here in this video. We also have some important economic data coming out tomorrow morning, and how that data comes out could really help to shape the Fed. And if the Fed starts to take a more bullish or dovish stance towards inflation and the possibility of even lowering rates in March. So we have a lot to get into. Ladies and gentlemen, let's go ahead and get started. Hit that like button as well as subscribe to the channel if you have not done so already. The first thing I want to discuss before we get into everything else here in this video is what we talked about in the video earlier today. We had very bullish option activity from hedge funds and institutions today in Tesla stock. Now, here are the final numbers for the day today. You had 192 different trades totaling $154 million with a positive order value of 87%. And what really sticks out to me is a lot of these trades are very short term. Like in the last couple of minutes of trading today at about 3:56, 3:57 p.m., Eastern Standard Time, just 2, 3, 4 minutes left in the trading day, you had a lot of these weekly $400 calls coming in with break evens around 406. Here is a February 21st 420 call, another 420 call. These positions worth over $150,000 a piece. February 14th 395 calls. Like, these are out of the money options that hedge funds and institutions are pretty much loading up on. Okay, whenever you see that kind of activity, it's something you want to pay attention to. Like these. I mean, February 14th, 210 call, worth $7.15 million. Another February 7th, 210 call, worth $7.15 million. And a February 14th, 210 call, worth $7.16 million. Okay, look at these. A May 16th, $700 call, two of these, worth $300,000. Okay. There's a lot of very bullish option activity today in Tesla stock that really stands out. I look at this every day, and whenever I see option activity that just really stands out, I bring it to your attention. It doesn't happen all too often, but especially when it does happen on days where Tesla doesn't do as well, or has kind of been down in the dumps like recently, it sticks out to me a lot more, and it makes me really pay attention. Now, ultimately, I really don't have a conclusion for that option activity. A lot of the time when you see unusual option activity like that, the next day you get big news. A couple days later, you get big news. There's usually a reason behind it, but it's not immediately clear what that is. So I'll just tell you, don't be surprised if good news does come out here in the next day or two. We've seen this before, and I've given you heads up on this beforehand. And then next thing you know, an FSD China headline comes out, or, something like that. So don't be surprised if something like that does happen soon. And honestly, FSD entering the Chinese market could be what it is, but we'll have to wait and see. Now, earnings today, we did have big earnings. AMD, Alphabet, Snapchat, Chipotle, Enphase, Amgen, EA, Lumen, Prudential, and Juniper that reported today in after hours. Big ones being AMD, Alphabet, Chipotle, but really it's AMD and Google or Alphabet that Wall Street is really paying attention to because of that AI component. And this headliner here says Alphabet shares drop as much as 9% on revenue miss and soaring AI investments. Okay, so it does say here the company also announced that it plans to invest $75 billion in capital expenditures in 2025 as it continues to expand on its artificial intelligence strategy. The company also reported disappointing cloud revenue at $11.96 billion during the quarter compared to $12.19 billion expected by Wall Street. Now, revenue actually came in at $96.47 billion, missing estimates of $96.56 billion. This really doesn't matter in the grand scope of things. It was so close, they essentially met expectations. Earnings per share came in 2 cents better than expected at $2.15 versus $2.13. YouTube beat, shout out to you guys. Cloud revenue again came in a little bit weak, and traffic acquisition cost came in at $14.89 billion versus $15.01 billion according to the Street account. So overall, earnings, not bad, not great. But what I really want to point out is the massive increase in Capex. Wall Street was only expecting $58.84 billion for capital expenditures related to AI, and they boosted that up to $75 billion. So that is an increase of about $16.16 billion in their Capex. That's raising their Capex guidance by over 25%. That, could be negative for Google from the valuation standpoint. It means Google's going to take in less profits to the bottom line. EPS is going to be lower, but it is one of those do or die kind of things for Google. Google has to succeed with AI, or it's really an existential, crisis for the business. Okay, unlike maybe other companies that could get away with, maybe investing less, Google absolutely cannot get away with investing less, and that is that's part of the negative reaction you're seeing in after hours that is helping to bring down the S&P, that is bringing down Tesla, bringing down basically all of your big tech names. Here in after hours, literally all of your big tech names are slightly in the red, besides Nvidia, that is only up about 0.1 to 1%. Now, in all actuality, I think this is great news for AI. I mean, what? Google just said they're going to increase Capex by another $16 billion. If we're looking at AMD equivalent, that's like more than 2/4 of AMD's revenue in a guide up for Capex. Not the whole number, but just the guide up in Capex on Google's earnings is equivalent to about 2/4, a little bit more than 2/4 of AMD's revenue. I mean, that I think is positive for AI. It's going to be positive for software names within AI. It's going to be positive for likely data centers as well coming tomorrow. So I think there could be winners and losers via Google's earnings and even AMD's earnings today. And again, for anyone that wants a rundown of AMD earnings, I know I said earlier in this video, AMD as a company, good company. I like their products. Can't argue with their products at all. From a computing standpoint, it's just a bad stock, and it's not AMD's fault necessarily, it's Nvidia's fault. When AMD comes in and they beat estimates, but they only beat by a little bit, it's not in AI land, meeting expectations is like a miss, and beating expectations by a little bit is like meeting expectations, right? Because of Nvidia. So this thing's just living in the shadow of Nvidia every earnings, and that's why the stock just cannot get out of its own way, even though it did beat basically across the board. 2024 revenue for Q4 came in at $7.7 billion, up 24% year over year and up 12% quarter over quarter. AMD was actually guiding for about $7.5 billion in revenue, so that was a little bit of a beat, right? GAAP gross margin, 51%, up 4 points, 4 percentage points year over year, up 1 percentage point quarter over quarter. Does Wall Street care? No. Operating income comes in at $871 million, up 155% year over year, up 20% quarter over quarter. So AMD, while it is down a lot, I don't think it's going to be a black swan for Nvidia, forecasting a big Nvidia miss. It's not going to cause people to doubt Nvidia, which is the one that really matters at this point. So from that standpoint, I really don't think anything changed, and this move lower in after hours is what I would call an opportunity, and not the stair step, first stair step down for broader markets from AI earnings. So that's kind of my overall opinion on earnings today. Snapchat posted some pretty good numbers. Chipotle, pretty good. Other companies, for the most part, did pretty good as well. Now, we still have some big earnings tomorrow morning. Uber, Disney, Novo Nordisk, Toyota, Boston Scientific. Tomorrow in after hours, Ford, Qualcomm, ARM, Symbotic, Viking Therapeutics, O'Reilly Auto Parts, and others. And then Thursday, Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey, Bristol Myers, Tapestry, Yum, and Philip Morris. And then in after hours on Thursday, your big dog Amazon will be coming out. Elf, Cloudflare, Affirm, Fortinet, Microchip, Pinterest, MPS, and Powell. So we still have some earnings today. For sure is not the end of earnings season. And then even next week, you're going to get a lot of, more mid-cap companies, software names, cybersecurity names, small caps that will report. So even the next following 2 weeks are even going to be important for earnings season as well. But not really, the big, broader market movers until we get NVIDIA, which will be later this month. I think 3 weeks away or so, NVIDIA will be reporting earnings. So there is that. Now, for economic data coming out tomorrow morning, this is going to be a big story. We have the ADP employment change. You're expecting 150,000 jobs to be added in the economy. This data comes out at 8:15 in the morning tomorrow. The ADP always comes first before non-farm payrolls. So non-farm payrolls are this Friday, and Wall Street is expecting around 167,000 job ads. So that ADP number, if it's a big miss, it's going to make people a little bit nervous for a miss on non-farm payrolls. Tomorrow morning, we do get big data with ISM services PMIs, expecting a number of about 54.3, a little bit higher than last month's number of 54.1. Business activity expected to fall a little bit from 58.2 to 58.1. ISM services employment expected to fall from 51.4 to 51.3. New orders expected to fall as well from 54.2 to 54.1. And services prices expected to actually go up from 64.4 to 64.8. And pretty much when it comes to ISM services PMIs tomorrow, they are highly watched by markets, and lower than expected numbers are going to be seen as positive for our markets, because it's really going to give the Fed the room it needs, the excuse, I believe, that they need to start lowering rates. And not sound like they are just being influenced by Trump's call for them to start lowering rates. They need the economy to start looking weak. They need the job market to start looking weak. And, we've seen inflation really making progress in the last couple of months. That's the last, I think, part that the Fed really wants to see right now, is the economy not being, super red hot. And if services come in on the weak side tomorrow, that is the excuse that the Fed needs to start cutting. From a technical perspective in Tesla stock, we held support at this support line here. We did that yesterday. The last time we did this was January 2nd. We went through a mini series of rallies, crept our way up into the 440s again. Does that happen again? Well, I think it really depends on the headlines that we get around the trade war with China. Apparently, Trump and the Chinese president are supposed to have a call here pretty soon, within the next couple of days. And depending on how that turns out, I think the trade war is still going to be top of mind for investors. Now, the data tomorrow showing how strong is the economy, or how potentially weak is the economy. I think that data is also important, because if the Fed starts to pave the way for a March rate cut, things could start looking much better. 10-year Treasury yields were down over 2 basis points today. In futures for tomorrow's trading, they are up 1 basis point. You're just really sitting around that 4.5% level. If we could break that 4.5% percent level to the downside soon, that would also help propel a larger market rally. And clearly for Tesla stock, it is still a very interest rate sensitive company. So I do think here in the next couple of weeks, you will see those treasury yields fall, and that will spark a larger rally in Tesla. To the upside, you want to see Tesla break above major moving averages, 20-day moving average at $404.33. 50-day moving average right at about $400 even. So if you start to break above these key levels, you could start a larger rally. And really this downtrending trend line here sits at roughly the $408, $405 level, in that range. If you could break out above that, then that could start a larger rally as well, to get above this downtrending line. That could send you again somewhere in the 450s, maybe to new all-time highs. I mean, once you break this trend line, you could have a pretty clear shot for some extended highs in Tesla stock. Now, I don't know if that's what the option activity today was really signifying. I don't know if there's going to be big news coming, but whenever you get some news like that, you get some data like that, it does make you kind of, tilt your head a little bit and say, is there something coming that we just don't know about just yet? And it's possible. So let me know what you guys think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.